Hi guys, I want to make a short video reacting to and talking about Meet Kevin closing his ETF, and I think it's a good choice by him because if you look at his background, he's not actually an investor, he's more of a salesman. Of course, he has bought properties, but he never bought properties to see the properties increase in value. He bought them to create cash flow, you know? So him moving into the stock market was crazy to me because like he never spent time actually researching fundamentals of business. Like he's lacking so much in this regard, and yeah, this is something that you could call the idea of hubris, the excessive pride or confidence moving into something that you don't fully understand. In finance, it can be that your strategy will outperform despite you actually taking on higher risk. For example, I think he shorted Bitcoin, which is just stupidity if you ask me. Many other fund managers have fallen into this trap by thinking they can outsmart the market. Overconfidence can create bias in one's own behavior, so to say. So I actually think this is a good choice for him, and yeah, I kind of want to applaud him for actually shutting down. Because if you look, it has been a fantastic year 2024 for the market, but somehow he managed to be negative. This is the mentality. You need to have the right mentality if you want to be an investor that actually picks stocks. I would say, for me personally, I don't expect to beat the market every year when the market is in a bull run. I prefer to beat it when it's in a downtrend, so to say. Like in a negative year, if the market is down 30%, I hope I can be at like negative 20%. Because a bull run is very irrational. Like you see, if a fund manager didn't have Nvidia or maybe Tesla, if they bought it at the right price, if they listen to me, yeah, shutting down his PP. And like I said, these people are salesmen. They're not really high quality investors in my opinion, and that's not their fault. They're making a lot of money just being salesman on YouTube, and it kind of promotes this attitude towards investing on YouTube, where you have to be a promoter, a salesman, instead of being a stable quality investor. Boom, 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 boom. Yeah.
I'm going to tell you about my experience creating the first ever YouTuber-led exchange-traded fund. The ups.
Yeah, you see how he said that? Like, it's a YouTuber-led fund. So it doesn't like focus on the fact that it's him who led it. Like, he doesn't say like, this is a fund that is led by great investors. It's a fund led by a YouTuber. So when you say stuff like that, I think you launched this because you wanted the promotional content, be able to go and speak in front of people and promote your brand rather than actually creating a good investment vehicle for people. And I think this is a dangerous attitude to have. I think his reasons for starting the ETF might have been wrong. Maybe he didn't see it like that because he promoted his brand, so he made a lot of money from promoting his brand using this ETF. So, but other people lose money, and this is, I feel it's a bad reason to start an ETF to start with, just for promotional sake, you know.
The downs, how much money I lost doing it, and
It's exciting. I kind of feel like I'm in a little bit of a dream world right now. It's just like surreal. I mean, look at all this crazy stuff around here.
You know, it's like a once-in-a-lifetime thing here, just being inside.
Oh, watch the hype.
Because you just can't believe that you're actually there.
The fact that a YouTuber has now gotten to the level that we're here because of his ETF.
I mean, you know, people work here their whole lives, and
The fact that this ETF is focused on the fact that he's a YouTuber is just so silly.
in the city and never go into
If it was like, oh, this guy has been a great investor for the past 10 years and he's done YouTube, yeah, okay, but this is him just expanding his brand and not actually taking the investing part into account.
that building and step foot on that floor. It was a once-in-a-lifetime experience.
Kevin, if you're watching this right now, you absolutely crushed it. We are inside the new
Yeah, he did, because he got a lot of promotion for his brand.
It's like to be on the trading floor during
Like, he has 2 million subscribers for a reason. He knows how to promote and sell.
stock exchange. But first, I want you to meet Summer.
1 minute. He's already starting with an emotional hook at 1 minute. Maybe his viewers' attention span is lower. Let's see. The problem with PP is you could track his poor performance. Yeah, that's true, man. Dude, you gave it a stupid name. Yeah, but yeah, so I don't feel too bad about people that lost money into this, because they could see actively who was behind it, and if they bought into it, it's kind of their own fault. Jack of all trade and master of none. Oh gosh. I'll leave you a small comment, man. We have to have an emoji. I don't know. Let's put a bomb for no reason. Okay, let's continue.
This is Summer. This is our miracle baby. She had a 50% chance of surviving.
You see, this is an emotional hook. I don't have this. Like, and I feel bad if I do. I would feel shit if I would lift up my baby and say like, oh, she had a 50% chance of living. Now keep watching my video because you're emotionally invested.
Last February, which means you're now one. There's so many lights here. She's getting a little nervous in here. Hey, oh, you actually have. This is Summer. You can play with that if you want.
Vill du ta kontroll?
And then he instantly after the emotional hook, he starts with a commercial. Because now you want to know more about the baby. You're emotional hooked to it. And he plays an ad to make more money.
I love her a lot, and she's well, she's technically a triplet, but she's also an identical twin. So we'll see. Maybe we'll bring in her identical towards the end of the video, depending on how she.
So okay, so he also put in he put in something to make you curious about the ending of the video as well. So he's a really good salesman, because now you want to know like what's his other kid like, you know, because you've seen the first one, you're emotionally hooked.
Yeah. She handles, if you will. Oh, okay. All right. Anyway, let's get into the video while Summer does Summer things. So first, I want to start with why. Why did I want to make an ETF?
Oh.
Frankly, it's because I didn't want to launch a meme coin.
What the fuck? Sorry, what the hell? Really? Your reason because you wanted to launch an ETF was because you didn't want to launch a meme coin. The only reason you should launch an ETF is because you have to. Because the opportunity for other people is too large to miss. That's the only reason why you need to launch an ETF. If your reason is because you didn't want to launch a meme coin, yeah, okay, you deserve to fail badly. Sorry, but I don't dislike this guy. He's charming. He's a salesman. You see his white teeth. I don't have these chemical cleaning products. I'm a normal dude. Yeah, you shouldn't have started from the beginning if that's your reason.
I really wanted to create something that would last and have.
Wait, you said you did it because you didn't want to make a meme coin?
An ETF. Frankly, it's because I didn't want to launch a meme coin.
So the reason he did it was because he didn't want to launch a meme coin. So he was thinking about launching a meme coin, but he didn't want to do it. So that's why he made an ETF. But then he goes on to say,
to create something that would last and
like to even consider cryptos into that sentence. I guess it's because audience might be mixed and you want to include the crypto people, but the reason seems bad. Something long term. That's a good reason, but you started off wrong. You started off with like, I didn't want to launch a meme coin, so I launched an ETF. So you're comparing meme coin with your ETF to start with. That's a bad beginning to. You understand what I'm getting at? It's just
had a legacy.
Weird.
Not something that was like some pump and dump. In fact, you can't even pump and dump an ETF. Like basket of stocks you pick, and the value of that ETF is defined by the value of the underlying stocks, right? So if you're 10%.
Maybe you can't pump and dump it, but you can for sure put it into a bunch of unprofitable, badly managed companies and see like 40 to 50% of your investments gone in like a year if you're a really bad investor. So yeah.
And Apple goes up 10%, your ETF goes up 1%, right?
Yeah, sadly your ETF wasn't all in Apple, because if you look at Apple stuff, because he wants to compare it to Apple is up 31% and his stock is down negative 1%. So would you rather earn 30% in a year, or would you rather earn negative 1.5? I would rather put it all into Apple than his PP found. Sorry, man.
If you can't rug pull an ETF, it's the most legit thing you could do. I got like different licenses, FINRA license.
Just because it has the title ETF doesn't mean it's very legit. Like you can see ARK Invest, majority of their companies are unprofitable, very badly funded, very badly managed companies. And they slam them together. And yes, maybe 1 to 20 of 100 companies will do good. And when the market is in a bull run like last year, it will rally. But not because the underlying businesses are good, because the market is pushing them up. The water in the pond is increasing. As soon as that pond starts to decrease, this happens, you know? So I see ARK ETF as something that's highly volatile and something I wouldn't put my capital into. And the same with his PP fund, because yeah, he's just doing random stuff, and he called it pricing power. I don't think he knows what pricing power is, because he hasn't owned one company with pricing power in the ETF. He just chose a name that matched with his PP concept. If he actually bought companies with pricing power, he would have done great. Like imagine if it was all MasterCard, Apple, Microsoft, and so on. His portfolio would be doing okay. It would be like 20% or something. Like mine. Mine's 2024. It's up 20% 2024. I don't understand how you can perform this badly in such a good year. It's just
Financial advisory licenses, a lot. So yeah, I mean, that means I'm actually a licensed financial.
That doesn't matter shit. It doesn't matter at all. Many financial advisors don't know how to invest. They don't know how to read a balance sheet. They don't know accounting. They don't know what creates value. And saying you're a financial advisor is, for me, just you put something on the wall to hang up to say, look, I took a course for 1 month. I'm such a good investor just because I have this course. And eToro is full of those people, and many of them just buy Bitcoin, and Bitcoin goes up, and they're like, oh, look at me, I have 20% return. But if Bitcoin collapses, all their profit is gone. So I don't think that matters that much. But you need to have it to launch an ETF.
I really wanted to do and create a product that was great, because ETFs have this really cool thing where not only are they transparent, actively managed, so you know you could send emails like, hey, here are the buy-ins.
You can actually go into my portfolio, fully transparent. You can go in, check my portfolio. It's fully transparent, and this is not an ETF. You can just go into eToro and you can look at my history, and you can see all of my history. You can go 1 year back and you see all my profits, all my buy and sells, and you can just look at what I bought and what I sold. And if you like my strategy, you can follow my strategy. You don't need to copy me. You can take ideas from me, and you can do your own research. And that's the beauty of investing. You have all the choices in the world, and you have to make a choice.
Sell alerts, kind of like ARK Invest does, right? But you can also go ring the bell at the New York Stock Exchange.
And he compared himself to ARK.
Come join us and ring the bell at the Stock Exchange.
Yeah, his babies.
7 now, 7 kids.
Okay, I'll speed this up.
You know,
This is taking too long.
Provide a service the right way, and not only provide these sort of transparent emails, but also take advantage of the tax benefits. Yeah, that's sheer tax benefits.
Okay, so this is for he launched this for tax benefits.
Gets excited right away. You like that tax benefits? The tax benefits of an ETF are actually pretty cool, because you can kind of 1031 exchange stocks, just like you can 1031 exchange real estate. The problem is they're really cost prohibitive, but I was okay with that, you know. So like there were a lot of
he's a salesman, not an investor. I agree.
And it was cool having, you know, if you typed in Meet Kevin into a stock brokerage, it's like, oh, there's the Meet Kevin pricing power ETF. Ticker PP, you know?
Yeah, like I said, he wanted this as a promotional material. If you write in his name into a stockbroker, his ETF will pop up. And that's all he wanted. He didn't really care that much about it, I think. He put a team behind it and then went,
But then came the downsides.
Ooh.
Are you ready to go? No, do you want to stay, or should
I actually wonder why his portfolio collapsed that badly. Like, if you're well diversified, you can be an awful investor and still do decent. Like, I haven't seen anyone do this badly. Well, I have actually. There are people that blown up their entire portfolios. But in a bull year, actually, like, if he just went AFK here, he would have been decent. He would have been up like 9%. And that's not a bad. I would see it as an okay year. 9%, 10%. If you didn't do 15% last year, I don't know what you put your money into.
So the downsides. Number one, I lost money. A lot. I would guess I'm probably down out of the whole like advisory, plan and biz and the ETF thing. Yeah, somewhere around $1 million. And that's because even though we were charging 77 basis points, which,
Oh yeah, he had very high fees as well. I forgot about that.
it's a decent amount for an actively managed ETF. It's the average is somewhere around 75. Some charge.
No, you can buy like is Vanguard like 0.03 or something. No one charged. Well, there are ETFs that charge 0.5, but why would you go into an ETF with that high fees? You're basically just paying management. That's the downside. You don't like a lot of activity. You shouldn't like a lot of activity.
Some charge 1.25 or whatever, but it's not as cheap as just an index fund, right? The problem is, I don't really get any of that. And I was okay with that. I was okay subsidizing it because I'm like, I think we can long-term create something great here. But, all the bankers, the suits, the lawyers, they all get their hands in the cookie jar and basically you're left feeding the kitty. So...
Oh, so he got grifted and then he left. He got grifted.
Lawyers and whatever.
So the grifter got grifted, so now he's stopping to grift because he got grifted by the lawyers. That's interesting.
Their fees.
Grift on, lawyers, grift on.
I hope I'm doing a good service here for people. But it wasn't just...
Wait, what? Good service for people? You lost money.
Ooh.
No, you didn't do a good service for people.
This is Violet.
Emotional hook number 2.
This is Summer's twin. You always get a little bit more nervous around strange things. Anyway, so...
I think he's a good family dad. And I think he should focus on his family. Actually, I think he's made enough money on YouTube. He could probably retire. I'm gonna tell you a story. There was a billionaire sitting next to a poor person. The billionaire told the poor person, I make as much in one day as you make in 1 year. The poor person looked at the billionaire and he said, I know, but I have something you don't. And the billionaire looked at him and asked, what? I have enough. Rich people normally don't know when they have enough. It's this kind of mentality of we need to move to the next level, next step. Sometimes you just have to know, like, I'm okay with being here. I don't need to be here in society. I don't need status. I don't need to be admired by people. I don't care if people like me or dislike me. I care what I think of myself.
After just the fact that it costs money, if it was just that, it was okay. I'm happy to keep contributing because I thought we were building something great.
Yeah, the problem here he has is when he had this massive of a down year when the market went up, he's actually destroying his brand, his image. So he kind of have to close it down. And also it's good for people that actually are invested because they were losing money. So I applaud him for closing it down and not actually keeping it going, because another person might have been even more corrupt and said, I will keep this going and they will lose money. Well, yes. But at the same time, if he believed he was a great investor, he would just say, this is a one year off. I did these mistakes and I will improve in the future. But you can clearly see this is not his take. His take is, this will keep on happening if I run this ETF. So I will take it down. And it's a good mentality, I think.
Great. The problem is there's a second downside, and that's the stress of performing. And don't get me wrong, we had our ups and downs. There are definitely,
Yeah, I can relate to this because I only have 11 people copying me, but this is still people that trust me with their capital. And of course I want to perform, but I also know that I can't control the way a price moves. All I can do is try to buy at the right moment and then try to buy the right thing, not buy the wrong thing. And it's easier said than done. Like, for example, I bought Celsius when it was below fair value, but then Celsius had one earnings where profit margins just went negative because of inventory issues. And because of these inventory issues, basically the entire valuation of Celsius was invalid. Yeah, I think as soon as the fundamentals come back, as profit margins come back in Celsius, we will see a recovery, but I don't want to be in the company when I don't know when or how they will recover. I'd rather buy into it when I know like the financials are returning than when they're declining. So yeah, that's enough about that.
Cases of having a publicly run fund where it's sort of like, okay, yeah, you
Yeah.
kind of have to evaluate.
I can
It
understand
makes
this.
sense to go through all of sort of the publicity that comes with it, because you think it's good, but every single time you buy or sell a stock, somebody's like, oh, well why'd you do that?
Well, that's the thing, right? If you have an ETF like this, people will look at what you buy and sell. People will look at what I buy and sell. And yesterday I bought more of Sotis as I thought the reaction was overstated. And I made a post describing what I think. They improved everything basically. Despite the strong fundamentals for 2024, it started to sell off. Revenue growth projected came in lower. They also have a repurchase plan. They have 4.6 billion worth of shares to buy back. So like I state my reason, and this is what I like about eToro, because I can say why I like something or why I dislike something. In an ETF, he kind of has to make, well, in his case, he can make a YouTube video every time he sells and buys, but I doubt he does. I haven't watched all his videos, but
Why'd you do it that way? Well, why'd you do it that way? Or why didn't you do more?
of course people are curious, especially when they have their money with you.
Today, understand.
Please write in the comment, how many commercials do you see watching my videos? I don't get paid shit from YouTube, okay? So I hope there's not too many commercials when you're watching me. But this is silly, like every 5 minutes a commercial. It's really milking it.
Actually up to me, and we'll talk about that in just a moment. So on screen here, you could see the Meet Kevin Pricing Power ETF at its peak. I think we had somewhere around $45 to $50 million of assets under management. ETFs are usually viable starting at like 40 to 50 mil. And there were some months where we were actually like positive, like we were getting money back after all the money that has gone into this in like launch.
Like, if I were someone that ran an ETF, I would expect 5 to 10 years to be unprofitable. So what he's saying is right. Either you need someone backing you, which I guess he doesn't have because he's just a famous YouTuber and he's hoping the audience will back him. And apparently they didn't back him enough, especially when he has that high fee. I would like to structure it like, if I could, I don't know if you can, like, I would structure it like, I pay no fees, but if I make over 8%, everything over 8%, I would take a small fee on. Something like that. But yeah, I don't know if you can do that with ETFs. I'm not that into ETFs, so to say.
Watching this, you know, it's a lot. Like we said, probably somewhere around $1 million into the whole advisory side. It's wild. That's like net, right? So I don't recommend it if you're trying to make money. But again, I was trying to do, you know, have like a legacy product, right?
Yeah, promotional product.
You can see is we
Legacy
actually,
product is
with the
not what you're saying it.
exception of the first 2 weeks of when we launched, this is frankly when Tesla like tanked. We were pretty Tesla heavy.
You should have watched my eToro account. I made many videos, many posts talking about Tesla and what's going to happen. I predicted all of the corrections perfectly, pretty much perfectly. Same with ELF. I predicted ELF falling. I predicted AMD falling. And it's not that hard really. If you have a company that's overvalued, the financials are getting worse, and you see the price chart change direction, you kind of know it's going to correct. You're better off leaving it, you know?
Heavy. We started out at like, I think 19% Tesla, and eventually we got it up to 25% Tesla. I'll talk more about that in just a sec. But you can see we
25% Tesla. Okay, maybe he bought like 200 because, you know, people are standing by yelling, buy something, you know? I understand that feeling.
We actually outperformed the S&P 500 for most of the 18 months. I'd almost say, with the exception of those 2 weeks here, all of the first 18 months.
That's not bad, actually. But the problem is, when you had such a good year, what did you do? Did you short sell Bitcoin? What happened here? He's saying, oh, it just fell. It just fell. But it has to be a reason, and I want to see if he covers that.
Until right over here, the turning point in September, when Jerome Powell in September cut rate. Okay,
so it's the rate cuts fault. He's blaming it on the rate cuts. Are you serious? So he blames a 17% drop on rate cuts? No, man, I don't believe you. You're lying out of your teeth.
It's 50 basis points. I'm like, this is it. The moment in
Oh, okay. He did something. Okay, he did something stupid when he heard the interest rates would be cut. Okay.
Well, apparently interest rates just decided to go up after we cut rates 100 basis points, which is only similar to what happened in the dot-com bubble
Okay, so what did you do wrong?
right now. But anyway,
But anyway,
there was some mispositioning here.
mispositioning.
Why in just a moment, but let's put it this way. The public stress that goes with this is insane. And if you're losing money on the actual fund and when it's performing well, nobody cares. Like, it's not like people are sending you letters going, yay, thanks so much, it's doing so well. Nobody cares. Except when it's underperforming, then everybody cares, and you're the idiot, right? Anyway, so yes, this period of time over here was an oopsie. More in just a moment on that. But
it's an oopsie to lose 17%.
these are serious downsides, right? It's very, very expensive.
You know what you do? You perform better under pressure. That's what you need to do. If you see your money or other money, it's not his money, other people's money start to evaporate, you have to start feeling the pressure and actually perform and not realizing that you're doing something wrong. This is not one day of bad performance. This is like half a year of bad performance. You should have realized, I'm doing something wrong. I need to correct it. You should have done the research before you open the pricing ETF to understand what to do. Like, things move up and down, you know.
The stress of performing is max. In addition to,
I'll show you something actually.
it robs you of other things that you could be doing that make money. Like, for example, you could make more YouTube videos.
Oh, okay. So now he's changing his narrative now. Now it's not about the portfolio being bad. Now it's about him being able to make money in other places. So yeah, he's trying to change. Go shorts. Last year, hello, give me. Here. Okay. This was when I joined eToro, and I didn't want to be the kind of person that I don't want people to think I'm doing something ugly. I want to be honest. I want to be truthful. So when I started, I went in with half of all my money because I had a lot of personal expenditures and I don't have a lot of money left, basically personal stuff, you know. So I went in with half of my portfolio into eToro, and I clearly stated I will never add funds to eToro. This is the money I have, and I will show success, grow it, and I will be promoted because of basically when my portfolio reaches 10,000, it will unlock the next stage, so to say, and I can have more people copy me. So now I'm limited to a certain amount of people. So people who get in now kind of gets like a priority over other ones because I'm not going to keep on adding. And I also saw this, there was like a bug on eToro that if you added money on a certain day, you could basically make it seem like you had a green day because the added money showed up like you made profit overnight. It was a weird bug. But I saw a lot of people exploiting this, people that were in the red. And yeah, I have the Woo here, and like I said, if you don't want to invest, just buy an ETF. VTI, Woo is nice. eToro is obviously not an ETF, so to say, but this is me selecting high quality companies. And I believe I will do decent over a long period of time. My goal is to make an average of around 17% a year. Yeah. So basically I want to double my money every 5 years. But you see, the first day, I put all my money into 5 companies that I had identified before I started my portfolio. They were all undervalued. They were all high quality. They had all high future potential growth. Everything was correct, if I say it like this, on these 5 companies. I crashed 14% like the first 2 weeks. I already then had 2 copiers. My parents, one, and someone else. And of course I don't want to disappoint these 2 people. So now imagine you have either you're a psychopath and can't feel the responsibility, and yeah, you kind of have to feel the responsibility. And when you have like his poor performance, sorry, Kevin. Yeah, you kind of have to shut it down. But I knew that these companies would do more than great. They would do, like, they would excel over time. And yeah, like 2 weeks later, I'm back. I'm back, baby. And my parents actually bought in the bottom, so they basically have like 10% higher than my performance just because they managed to buy like after I dip. So I'm happy about that. Then the thing is, like, if I waited 2 weeks, I like, that's fate. That's fate. And yeah, like, everything moves up and down, up and down. It looks less choppy like this, but and I had periods where the entire market suffered, but I recover, and I think over the long run I will do great. So I'll make a video what I've done this week in my portfolio. Nike is down 14%. That's my worst investment. My best investments is Shopify, Fortinet, Meli, PayPal. I've cut some of these a bit and I've changed around a bit. So it's a bit of portfolio management, but I don't want to go in too high into like being active, but sometimes you have to do something. It's a bit like you need to protect the risk. But I think the problem with his ETF is he was too active. If he was more passive, he would have had a good year.
Or you could
maybe
focus more on house hack.
Or maybe
that is going to be my true legacy product.
And one more commercial.
Because
so what he's saying is, I've looked into this. He's selling like bonds with 5% yield in a high risk, low reward, low liquidity investment. If you buy into this, you're basically stupid. You're basically giving him free debt. Or not free, but he's giving you 5%, but he can stop paying that. You know, how do you say, like, he's not forced to pay you.
Because, well, it's kicking butt, it's positive cash flow. We've got, you know, what, $60 million roughly in assets. The company's probably worth.
Okay, but where's the financial papers? If you talk about that, you should link the financial papers. How's like these people with upside potential. That's a nice word. Minimum. Oh gosh. Like, this is like buying their, you know, Jeremy used to have a course you could buy for 20k. It seems like to be their number, like 20k. We want 20k of your money. Can you give it to me? 20k. And I'll give you this service. PPM agreement. I can't even read it. Okay. Concares a personal guarantee of our funder until the bonds are converted into shares. No guarantee that they ever will be converted into shares. This is like when paid monthly, while current common stock share do not receive interest. May convert into common stock. Have upside potential. Yeah, but you don't have any upside potential until he goes public with this, which he most likely won't. Now when he had a terrible experience with his PP. I doubt this will pay off because he's never going to go public with this. Unless he goes out and says that in 2025 I will go public. This is the reason and this is why. But he never does that. He's a bit flimsy like all these salesmen.
Worth somewhere around 100 million.
They're good at talking. They have silver tongues. Yeah.
And we're doing really well. We basically
really well.
We have an extremely efficient company now.
Oh, it's efficient. It's an efficient, low quality company that you can buy bonds in, so he can make money. Nice face, by the way. Yeah, so I don't know what to say about this. It's just like he's focusing on another grift. He clearly sees this is a bad image for his brand. I would run to the hills if I was him as well. I would just run as far as I and like try to make people forget this. Like, this never happened. Like, this never happened. It doesn't exist. Bye guys.